Hello, I'm Jim Burkhard with IHS Energy. And in the months leading up to CERAWeek 2016, the oil market is going to continue to get lots of attention. Where are we headed? There are three really big drivers that are going to be shaping the future of the oil market, not just in the months ahead, but certainly for the years ahead. And those three big forces are: one, the future of Chinese demand. The second is U.S. oil production. And the third is OPEC production policy. If we go to the first one, China. Looking back at the last 15 years, the rise of China, the increase in prosperity in China was a very critical force that created the oil market environment that we've known for most of this century. But with the financial market turbulence, in late summer 2015, the growing concern that China's economy is decelerating, we're likely to see Chinese demand growth enter a period of slower growth, a deceleration of Chinese demand growth. And that's because the Chinese economy is moving from one that's largely driven by industrial investment, infrastructure investment, to one driven by consumer buying. Demand will still grow, but China's entering a different phase of its economic growth. So China slowing down, big focus, big question. We'll be looking more at that at CERAWeek 2016. The second big factor is U.S. oil production. And those involved in the oil market have been obsessively looking at trends in U.S. production over the past year since the oil price collapse. As we all know, the incredible rise in U.S. production was a primary catalyst of the price collapse of late 2014. So far in 2015, U.S. oil production has been resilient despite the high decline rates of tight oil production, despite the collapse in prices. But we are seeing signs of month-to-month U.S. production falling. How much will it fall in the months ahead? Will it fall in 2016? There are signs that we're getting to the point where U.S. production growth could begin to diminish the supply glut. But again, that will take time and it will be into 2016. That, again, will be a big topic at CERAWeek 2016. The third really key driver or element that's shaping oil market psychology in particular is the specter of an OPEC production cut. Now, OPEC does not exist as we knew it. Back in November 2014, OPEC decided to not cut production despite the fall in prices. OPEC has stood aside and abandoned efforts to try and manage production. So it's a new era for OPEC. But there's still a possibility that OPEC could act at some point. So the specter of an OPEC production cut is a factor that is still shaping market thinking. It can still lead to price moves at times. OPEC decision making, it won't always be clear. The decision making can be opaque, and a decision to cut production on a large scale could happen overnight, which could readjust the global oil market balance quite quickly and in a significant manner. So the specter of an OPEC production cut, even if it is unlikely, even if the conditions that led to OPEC's decision to not cut, those conditions are still with us today in late summer, early autumn 2015. Those conditions are still with us, but the specter of an OPEC production cut means what OPEC does, what key OPEC members say, that still has an important, can be an important influence in the oil market. So those three driving forces in the world of energy, particularly for oil, Chinese economic growth, U.S. production trends, and OPEC production policy. Those are really key drivers shaping the market today, and we will be talking about them more at CERAWeek 2016 in late February in Houston.